Hey guys, welcome to another Trade Genius podcast. Philip here with Bob Kula. As always, a lot of volatility in the market. The market's been running up like crazy, and today with Powell's comments, it went crashing back down. And there's a reason why this is happening on a more regular basis. So we're going to talk about what's going on and why it's really dangerous ultimately for the market. So let's dive in.
Trade Genius.
Hey guys, I want to tell you something that we do that really will change the way in which you look at trading and also absolutely help you increase your profitability and how much money you make. It's the Trade Genius newsletter. We put the newsletter out Sunday night through Thursday night, and this really looks at the plumbing of the markets and helps prepare you for the next trading day and help you make money. And we give you a lot of information. We give you market statistics, we give you market levels, we give you the seasonality, what's happening with different sectors of the market, and we will help you identify whether the market's in a bear mode or a bull mode, or whether it's euphoric, whether it's despondent, and it just puts you in a position to be on the right side of the trade. So take advantage of our offer that we have below, and you'll love it. I mean, one trade that you make with this thing can pay for definitely a month, maybe even a year's worth of service. It's that powerful. Use promo code podcast for 15% off the retail price of newsletter. Thanks for listening.
Hey, Bob. So yeah, another crazy day. We're going to get into the charts a little bit later, but can you explain really why this is cranked up? This volatility is just so crazy right now, even though like some of the volatility instruments that we are normally used to, like VIX, is acting like it's not a big deal, but obviously something's going on because the ups and downs in this markets are making everybody seasick.
Yeah, I'll be with you as soon as my Xanax kicks in, Phil. Yeah, it's a crazy day. I mean, and it's getting really weird too. So what's happening and what we're going to talk about today is this phenomenon called the zero DTE, which means 0 days till expiration of an options contract. And what has happened here is retail found this first when they launched this in the fall, and then the big boys took over trading this thing in the new year. And right now, really 95% of all trades now, Phil, as of the reading today, is institutional traders. Retail's 5% of the activity. So you can't blame dumb money for what's happening here. It's all about right now, guys. Massive amounts of leverage are being unleashed on the markets during the day. And one of the really interesting reasons why is that we were going to do another podcast on these things called the systematic trades that happen based on volatility. And so if you guys will indulge me a little bit of tangents here, I'm going to try to explain maybe what I think is happening here is that the big money wants to get out of this market. And the only way they can get out of this market is if they get somebody else to buy this market. And so they've already fleeced retail. They've already fleeced the call buyers, and now they're going after these guys called the systematic traders based on volatility. And the way it works with volatility is the calmer the markets are, the more risk that you're allowed to take in the market per the rules. And these systematic trades, they don't really, talk about the trade before they do it. Their robots are trading based on the calmness of the market. So these zero DTEs come in and they act as a daily dampener on the market, and it allows then more risk to be pushed into the market and see some of this buying. And like last Thursday, they used an algo tripped on a word called pause, and then there was high short interest, and there was people leaning into, I believe it was one of the support levels, Phil, and then they just did this massive 2.5 day short squeeze. Well, that ended with a big kerplunk today, and it caused some people to say, hey, what happens if these zero DTEs, instead of calming the market every day, you get a flip in the market and you get in a situation where they call it negative gamma, which means that you get an acceleration with the move down in the market. Instead of them calming the market when it goes down, they actually accelerate it. You basically get a panic move by the derivatives at the same time the broad market is going down. So you have a situation here where I think it was JP Morgan, I think, put a note out there today just highlighting basically a 5x move if we get to a certain amount of selling during the day. So if we have a big sell-off, and I think maybe the next chart kind of explains a little bit, Phil, and there's a little bit of extreme, but what they're saying is just to show you, and we've gotten 5% down days in the market. So if you get a bit of a flash crash on news or something, and and these derivative traders are very, very, very fast money. If they get caught goofy footed, they just will roll with the trade on the downside. They can basically take a 5% loss and convert it into a 25% loss in a heartbeat. And people say, oh, Bob, that can't happen. But it has happened. We've had these kind of moves in 2011. We've had these moves in 2020. We've had these moves in 2008. We obviously had the big move in 1987, but the leverage now is more than it's ever been, Phil. Mm-hmm. So I wanted to kind of throw that back at you. Did I make sense explaining it to you so I can hopefully explain to the audience well what I think is happening here?
Yeah, I think so. I mean, yeah, so basically the way the zero DTE is and the way that the gamma, I don't want to get into too technical here, but essentially because they expire so quickly on the day can exasperate if the day starts to go down hard. And I don't know if you had mentioned it, but they had some specific numbers in this paragraph here about how if you fall, a scenario where if you fell 5% in 5 minutes, you could trigger $30.5 billion in zero DTE option related trading that would tack on another 20 percentage points. So think of it like everybody was trading at FTX at like 50 or 100x leverage. They've just brought that over to the equity side now. So everything they were grumbling about crypto and how it's so, over leveraged trading over there, it's like they've essentially unleashed that over here now because of the way the zero DTEs work. Because it really is like having 50 or 100x leverage because you're able to move a lot more nominal position sizes relative to your account balance. So
yeah, and it's frustrating for us that are, today it wasn't frustrating because we made money on the short side, but it is frustrating when you see the fundamentals and even the technicals in your way, and they're able to throw a lot of derivatives at a problem to forestall the inevitable. And my worry is that instead of them calming the markets, they're going to cause what they hope to avoid in a very, very big and profound way. And I think that would screw up Powell. And, we were talking today while they're doing their testimony about, how can he curb inflation? Well, here's one of the areas right here, right now. Why are you even allowing this amount of leverage in the markets? And the only thing I could say, Phil, is a bit rhetorical, is that they know that the price of money is going up and they know they have to get out of positions, and the bankers are letting this happen so that the insiders that are connected are exiting the market. The banks aren't lending anymore, so the banks have already kind of creating a moat around themselves. And then, companies like Citadel and BlackRock and those guys, they're creating moats around themselves now too. Right. And everybody else is going to be left fending for themselves, and they're going to be able to come pick up the pieces at 25 and 30% lower here really soon. Look, they're talking 6% money now, Phil. Okay. I don't know. You have to be out of your gourd to be leveraged long in this market. The only thing that you should be owning are things that you truly believe you want to own generationally. Right. Everything else is a trade right now. And at 6% money, people are going to start throwing billions and billions of dollars into the treasury to basically let the government work for them instead of them having to try to eke out gains here in an environment where it's going to be hostile to them. So, I think I'll shut up now and let you kind of show the chart where we think this may even go.
Yeah. So let's talk about today then. Powell, you kind of have to let what he says kind of percolate and see what the market reaction is. But I personally think you could probably call this Jackson Hole 2.0. And the reason for that is because he was back to very hawkish. I think he was very careful not to have anything that he said be interpreted as dovish. And I think he also probably gave the message that 50 basis points is very much on the table for the next hike and could possibly happen again later in the year. And this is based on kind of some feedback I was reading after his commentary. So the market obviously is coming back down. So I know people are probably going what the heck? Because we just ripped up here like there was no tomorrow, right? And then we've come back down. Well, obviously coming back down is this is what the classic buy the rumor, sell the news, right? Because you run up into Powell's testimony. The minute he opened his mouth, it was an immediate reaction down. They pulled the rug. So everybody's wondering okay, well, where are we going? So one thing I like to do is look at where we are in relation to the 50 weekly moving average. And that's this stepped line, this red step line that's coming down. And so the bulls were in total control up here because they got over that line. Okay. It's as simple as that. If you're bullish, you got to hold over that. That's how you end bear markets. They didn't do that. They fell back down. And that was triggered by the CPI announcement, okay? And if you look back on the various CPI announcements, they usually are big pivot points in this market. So, it's like they run up, into again, by the news, except this was a long run into the CPI announcement, but that's essentially what happened. And when the CPI came out, they sold it. And then this was another smaller scenario of that. So we're rolling over. And if you guys have been watching our videos, and if not, check, I think it was yesterday's video, we talked about liquidity. You'll see we're about 350 some odd points over fair value. So what that means, big picture, in my opinion, is that we're going to come back and we're going to visit this 200 weekly moving average. We bounced off of that. That was our bear market low. Okay. But as we come back under this weekly 50, and as we start taking out a lower or a higher low, which would be this last low we put in last week, Thursday or Wednesday, I think we put that low in. This is going to start lighting this target up, this weekly 200. So that takes us back down toward the, below 3750 essentially. How fast we get there, I'm not exactly sure. The next big target here, and this might be resolved overnight for you guys that are wondering on the SPX, is going to be this daily 200. I don't have it called out here, but this is the daily 200, this black line. We battled, if you zoom in, this is what devils are in the detail. Oops. You'll see we battled here on the way up. Okay. And so this is a little zone of conflict, we call it. And you can see where we dipped a toe into that zone, okay, and price held up. I don't have a lot of faith that they're going to just stop right there, okay? This is a very, very, very big 4-hour candle, and most of these big 4-hour candles sees follow through. So what usually happens when you get this type of move is you come back to the point of launch, right? This is where Bostic said, 25 basis points or whatever. The market just used that as an excuse to squeeze the shorts. So all these shorts got blown out. Now what do you have? Now you have long leverage. So it's just this back and forth violent activity that's going on. But losing these levels, losing the weekly 50, this blue line is the weekly 90 EMA, that kind of stuff, when you lose it like that, you've dropped the ball as a bull. So it's totally back in the bear's court. This is the next level, the daily 200. You start breaking back through that, we'll test these lows, and then breaking back through that, I think you have to be realistic and start looking at this area, 3,800. Probably gets targeted, right? Because the market loves to seek and destroy, right? Get these lows. Everybody's hiding behind the lows, right? Not the smart money. Smart money is looking to fill these areas of liquidity. And then ultimately you get back to that weekly 200. So that's kind of big picture. And then Bitcoin, Bitcoin's been leading this move lower. If you guys recall, it dumped first, right? And so Bitcoin's a great leading indicator, and it's probably on its way toward sub 20. I don't have the chart up handy to go over in this video. We'll discuss it later, but that's probably what Bitcoin's doing for you guys that are following that. So I'm back on the position that the bears are back in control, and they have a really good shot here of making new lows.
Yeah, and Phil, maybe let's talk Bitcoin tomorrow a little bit, because I bought BITI this morning, for the subscribers as a hedge. That's the short futures ETF.
Yeah,
and maybe we can show people how you can leverage.
Hedge.
Because you approach things from the crypto side, so maybe you can talk a little bit about how you can do a long and short from the crypto world, and I can talk to people how to go long and short crypto from the stock world.
Yep.
And also, I think you have a really cool new tool out too that why don't you unveil that and show people, we could track fair value on Bitcoin too.
Yeah, and that's very telling. We'll go over that in a little more detail tomorrow, so stay tuned for that. Yeah, otherwise, expect more volatility, but we do expect more downside to come, and so brace for that. But the zero DTE is a big issue. And Bob's not kidding when he brings it up, because we had an issue. Bob, that's one thing before we go. Remember XIV Volmageddon 1.0, and they're talking about that. It's a repeat. I mean, overnight, that was like a tragic event going into the end of 2018, I think it was.
It lost 97% of its value. And I tried even to mention that. It lost 97% of its value by the time it closed at 4:05 p.m. till the next morning, because it blew up the fund that was supporting it. And that's the thing with people. We don't know what we don't know what's behind some of these things. And you don't want to be leveraged. Right now, I'd rather lose money taking shots hedging short than being leveraged long in this market right now.
I totally agree.
It's asymmetric at this point, guys. It truly is asymmetric.
Yeah. All right. Well, that's going to do it. Hope you guys can take that information and guard yourselves. And we'll see you on the next episode. Please hit like and subscribe. Smash that notification. And if you could set it to all notifications, that would be awesome. And we'll see you on tomorrow's video. Take care.